And you would be amazed at how many people say, I didn't know I made that much money. Where did it all
Mm-hmm.
go? It opens up the opportunity to say, where did it all go?
Mm-hmm.
How come you're making X amount of money and you have really nothing to show for it, right?
Mm-hmm. Hola, welcome to another episode of the Money Chisme podcast. This week's chisme, let's talk about building a sustainable legacy and building generational wealth with a little bit of focus on the taxes aspect of it. Joining me today is Sugey Piedra, co-founder of Prominence Business and Wealth Management. Hola, thank you so much for joining me today.
Hi, thank you. I'm excited to be here. It's definitely a family affair. It's my sisters and I who started the business. We are five sisters, and two of them are in the medical field, so I couldn't actually recruit them, even though they're partially involved.
Mm-hmm.
But the three oldest, we decided to open up a business where we do taxes. We do tax planning, but we're really focused on helping clients really navigate what taxes are. Our goal is to keep more of our hard earned money. And so we come from a very humble upbringing. And I really thought that it was just like my parents who didn't understand taxes because they didn't really speak English or because they
Mm-hmm.
were immigrants to this country or whatever. But as I started this career, which I'm celebrating 22 years now, in taxes, I realized that it has nothing to do with where you come from. Taxes are just extremely complicated for people. People fear the IRS.
Mm-hmm.
They're really not taught to us in school. All of a sudden, you get your first job and you're like, wait a minute, where did my money go? And then I think we all kind of navigate life where, Uncle Sam just takes his portion before we even have a say so. And
Mm-hmm.
nobody ever educates us on how to keep more of our money. And nobody even knows that you really can. And everybody thinks, well, that's just the way things are. And in reality, there's so many things that we could do to keep more of our money or to generate like passive income that could potentially be tax free. But no one really talks about it to us unless we run into like a TikTok video or
Mm-hmm.
you hear like the wealthy are not paying taxes, and you're like, well, I'm not wealthy because I pay taxes or whatever.
Mm-hmm.
And so we wanted to change that. So I took advantage of the fact that during tax season, everybody has to do their taxes.
Mm-hmm.
And so I would just take the time and block off extra time and tell the client, okay, your tax return is done, but I want to go over the numbers. And they're like, what numbers? And I'm like, you do know numbers go in your tax return, right? But people were so foreign to it. No one's ever done that, but I want to do it different. And so
Mm-hmm.
that required for me to, educate people on what's on the tax return, what is it saying about you, and you would be amazed at how many people say, I didn't know I made that much money. Where did it all
Mm-hmm.
go? That's like the number one response. Where did it all go? And so now I jump into it opens up the opportunity to say, where did it all go?
Mm-hmm.
How come you're making X amount of money and you have really nothing to show for it, right?
Mm-hmm.
So it allows us to open those conversations that really no one wants to have. And by doing so, it imploded my business because I was getting referral after referral after referral because people were saying she's different, she's different.
Mm-hmm.
And I really had to dig down and figure out, why am I different? And I started to realize that really no preparer out there was doing that. And so it made my business really stand out.
That is so true, which is what I'm excited to like kind of talk about because like I've since I move around a lot, I always have to find like a different tax preparer or whatever. And I've never had somebody like sit down and be like, well, this is what you could have done different or whatever. Matter of fact, the I will say the only person that ever said anything or kind of educated me a little bit on taxes was when I was applying for a loan to buy a property. And the loan officer was like, you didn't depreciate this property last year. And I was like, what is that?
Yes,
And I didn't know.
exactly.
And even the one I have now, I mean, I went back and checked because I had just found about bonus depreciation or whatever.
Uh-huh.
And I went back and I was like, wait, let me make sure. And she did it. I was like, but she is the same way. And I've had someone do my taxes before, and it's just kind of like, here, give me the documents and I'm gonna file it for you. And then that's it. It's filed. And then that's it. I don't get no feedback on what I could have done different, or just even a kind of like a debrief of what the
What did it
taxes mean. I just see numbers and I had to go and look at it and be like, what is this? And switch back, and like I'm just Googling stuff and and I this year I kind of want to get in front of it and actually like schedule some time and talk to a tax professional and kind of do a my
It's
tax
called
strategy, I
tax
guess.
planning. It's
Yes.
called tax planning, so you know
Mm-hmm.
how to strategize to beat Uncle Sam. And so, what I've really been trying to tie into people right now, because tax planning is really foreign to people, and people are like, well, do I need it? Right? Am I
Mm-hmm.
making enough money? But it's not about how much money you make. Okay. It's about what you do with your money that really matters. Okay.
Yes.
I've got wealthy clients who have made $70,000 a year. But
Mm-hmm.
guess what? They knew how to manage and leverage their income so that they could get rental properties and they have passive income. And now they have an amazing portfolio where they can retire early if they want.
Mm-hmm.
I've got families, I've got a couple who married another professional, right? It's a husband and wife that met themselves at work and they're both professionals. They both make
Mm-hmm.
about half a million. They both make 250. That's a $500,000 couple a year.
Mm-hmm.
You would think that when you say, I always say, I used to say it all the time, man, if I make more money, I would be better. I tell you right now, it does not matter how much money you make. It's what
Mm-hmm.
you do with your money that really matters. Because I'll tell you, that couple lives paycheck to paycheck, just like anybody else would that's making minimum wage,
Mm-hmm.
because they just increase their lifestyle. They have a bigger house, a car they can't afford. They've got all of these extravagant things that they got going on. And what are those? Those are just monthly expenses, not
Mm-hmm.
making money for them.
Yeah.
So they're stuck in the rat race, like a lot of us are, right? So
Mm-hmm.
I'm here to tell you right now that it does not matter how much money you make. It's what you do that matters with it. And
Mm-hmm.
we can all really create wealth. And I talk about building generational wealth, changing the way things are. We're not going to learn it at school because school doesn't want to educate us in this. They don't want us to figure it out.
Mm-hmm.
They don't want you to figure out how you could pay less taxes, how you can leverage your income. And you have to figure it out on your own. But our industry in the tax world is really broken because so many preparers out there. You go to H&R Blocks, you go to the tax preparer in the corner. It doesn't really matter. They're there only to fill out a form for you and
Mm-hmm.
submit it. They're not supposed to be your advisors. Now you got to go find an advisor. So there's a disconnect in that
Mm-hmm.
in our industry, right? If you were to plan out your taxes like you plan out a vacation or you plan out your goals or you plan out your visions or whatever, right?
Mm-hmm.
Then you turn around the tax return to do what you want it to do, not whatever spits out and that's what you submit.
Mm-hmm.
So that's where the magic happens. So we have to do it during the calendar year because if you like right now, 2024 started, right?
Mm-hmm.
Well, there's a handful of things I could do for you for 23. Very limited. One, two, three different things, right?
Mm-hmm.
I'm very limited on what I can do to help you for your 2023 because it's closed.
Mm-hmm.
But 2024, OMG, I have 11 months to figure out how to do this, how to move that piece, how to, I could tell you what you could go do. I can tell you what you can set up. I can tell you all this cool stuff. And now you have a little bit of homework to do, and you do it before the calendar year is over. And
Mm-hmm.
all of a sudden, the return starts to shift. You start to pay less taxes. You start to reinvest that money in yourself and your family and your wealth, whatever you want. And now the tax return is working for you. And
Mm-hmm.
that's what I'm about. That's the message I want to spread. Because if we keep doing what we have been doing up to this point, then Uncle Sam wins. And look,
Yes.
we're in the US. This country's made out of taxes, right?
Mm-hmm.
it's a country that we love. I love being in it, and everything around us is paid by taxes. I get it.
Mm-hmm.
I want to pay my fair share. I don't want to pay any more than I have to.
Mm-hmm.
And that's what I tell people is you pay way too much taxes. You could have done something different, kept more in your pocket and created wealth that yes, it's going to be taxed anyways,
Mm-hmm.
right? But at least you're creating more that you get to keep in your pocket. And that's it just takes a little bit of tweaks, a little bit of education. It's a whole different way of looking at your taxes.
And I'm so glad that you are trying to advocate for that because I do see it being promoted like, oh, everybody's chasing, financial freedom and generational wealth, but I rarely see someone that's actually talking about like, okay, well, now you're getting financial freedom or you're trying to build that generational wealth. Okay, now what? Because it's gonna get like taxed and like even thinking about like passing on the properties that I have. Now I'm like, okay, so how do I pass it on to my stepson and my soon-to-be daughter? Where do like how do I pass it on to them without like all these taxes? And you hear the horror stories of like these taxes. So like no one's really explaining that. And how you were just saying is like now that I'm making more money, and it's crazy. It's like, you thought like, okay, making more money at this time, I'm gonna be good. But then there's more taxes, and it's
Right.
like, what do I do to keep more money with me and with all these investments and stuff like that? So I'm so glad that you are bringing that to light and actually helping people like actually think about that. Like, all right, you're paying
Yeah.
too much. You got to start planning for them too.
Right. No, a lot of the times people it amazes me how foreign taxes are to all of us,
Mm-hmm.
right? And I put myself in there because tax planning is something that evolved from me starting to connect the dots, right? For me looking at hundreds of clients that would come in and just seeing the same pattern over and over and over, the
Mm-hmm.
same mistakes, the same, and then them leaving and doing them again next year and not and it's because nobody they don't know any better, right? We don't
Mm-hmm.
know any better. And so I kind of started to connect the dots and started to realize that yeah, we're all afraid to look at our finances. We all really don't understand taxes, and so what we don't understand, we don't know how to change, we don't know what to do.
Mm-hmm.
And so when I take the time and I say clients, okay, look, I talk a lot about real estate because real estate is still one of the strategies out there that you can create wealth
Mm-hmm.
and create it and it could be potentially tax free. So
Mm-hmm.
what that allows you to do is for you to create even more wealth, right? Because Uncle Sam's not taking that from you.
Mm-hmm.
Yeah, it has to be set up properly. It has to be done correctly. This is all legal stuff, but it
Mm-hmm.
has to be done correctly. And so I get people in here that sometimes will be like, hey, I have a rental property, but I don't want to report it. I don't want to show the money because Uncle Sam's just going to tax it. And I don't want to pay
Mm-hmm.
tax on it. And I'm like, do you know how much money you're leaving on the table because you don't
Mm-hmm.
want to report it? And they're like, what do you mean? I'm like, have you heard of depreciation? And they're
Mm-hmm.
like, what is that? I'm like, the majority of the rental properties out there will report losses that will help offset your W-2 income,
Mm-hmm.
depending on every situation is different, how much money you make and your setup and all that. But potentially that could be an offset to your W-2 income, which will result in less taxes for you.
Mm-hmm.
And they're like, what? Huh? I don't get it. And so I literally have to do the return for them, show them the magic happen. And they're like,
Mm-hmm.
OMG. And I didn't want to report it. I said, I know you don't want to report it because probably your neighbor doesn't report it, or your coworker told you not to report it, or your mom
Mm-hmm.
told you not to. Somebody told you something that made you fear reporting it, when in reality, if you do it correctly, now
Mm-hmm.
it's on your tax return. Potentially you will owe less taxes. If set up correctly, now that's leverage. So when you can go get another property, the lender's going to be like, oh, this guy works and now he makes income on this rental property and
Mm-hmm.
it's actually cash flowing, which is more income for you. So it'll actually help you if you
Mm-hmm.
do your taxes correctly and everything lines up. So
Yeah.
when I teach clients and I really take the time to explain this to them, they start to understand them. And it's like unleashing the potential in them and the opportunities open up because now they see, oh my God, if I go get another property, that means I'm going to get more losses.
Mm-hmm.
Yes, if you go get this type of property that's in this kind of situation, oh, I'm going to go do it. And so now
Mm-hmm.
they're proactively acquiring properties that
Mm-hmm.
will help them offset income that they were trying to offset to pay less taxes. So
Yeah.
it's a game. It really is a game. If you know how to play it, you will be set up. You're setting yourself up to win.
It's like as soon as you say like taxes, and it's kind of similar with like the financial, like personal finance and financial literacy. You get that like financial. I mean, it's part of that, right? And like you hear taxes, and people just don't want to like touch it. They don't want to do anything. And early on, I was the same way. Is like, you know what? I'm just gonna like just do my taxes, and that's it. But like you said, I was leaving money. I started learning about depreciation and all this stuff, and it's like people are so afraid of that. So you have like on one side where they're kind of scared, and then you have like the other side that are like, well, that's cheating, or they get like this
Aggressive.
idea that yeah, they get this idea that it's not legal. I've seen some people like uh talk about like maybe mention something about taxes like, oh, you're cheating the system, that's illegal,
Yeah.
blah blah blah. Like no, it's not. It's like those rules are there for you to take advantage, but we just don't know the rules. And there's like, and then we're scared to look for them.
It depends, right? Sometimes people
Mm-hmm.
say, well, it's our culture, right? Where
Mm-hmm.
we believe cash is king. Stash, all the cash in your mattress kind of mentality, right?
Mm-hmm.
I'm here to tell you that hurts your purchasing power.
Mm-hmm.
Okay. We will have sometimes individuals that come in and be like, look, I run a business, but it's literally cash. I don't want to report it.
Mm-hmm.
Do I have to report it? And I'm like, come on, you have to report it, right? Any
Mm-hmm.
earnings need to be reported. And I'm here to tell anybody out there, like right now with like TikTok and social media and people making money on the internet, they're
Mm-hmm.
all worried about whether a 1099 is going to be issued or not. Whether a 1099 is issued or not is irrelevant. You need to be reporting that income because it's earned income. And
Mm-hmm.
that's where you're breaking the law. That's called fraud, right?
Mm-hmm.
And I always share this story. What did Al Capone go to jail for? You know,
Mm-hmm.
he murdered, sold drugs, did all this crazy stuff, but that's not what he went to jail for. He went to jail for
Yeah.
tax evasion.
Oh
And
yeah,
so,
that's true.
and so that's what I tell people. It's like very plain and simple. Are you evading taxes? No. Are you being strategic and minimizing your tax liability? Yes, legal, right? And so
Mm-hmm.
it just takes a little planning, and it's about really understanding how to use the IRS code to your benefit.
Mm-hmm.
And we see it with like Amazon. We see it with like, when they talk about like, major Bill Gates, whoever, it doesn't matter, right? All these
Mm-hmm.
major gazillionaires, and they're like, oh, they only pay like, or they pay zero taxes, or they
Mm-hmm.
pay $80,000 in taxes, or their secretary pays more taxes than they do.
Mm-hmm.
Well, guess what? Because they know how to utilize the freaking entire IRS code
Mm-hmm.
benefit.
Yeah.
It's not that it's illegal. It's totally legal. You just have
Mm-hmm.
to change the way you do your financials in order for you to satisfy that. And it's totally something that you can do, anybody can do. You don't have to
Mm-hmm.
be extremely wealthy. You just have to learn to know what to go after. And if I'm telling you real estate is one of the things that you don't have to pay a lot of taxes on if you set it up correctly,
Mm-hmm.
guess what? Then go get that piece of real estate that I'm asking you to get because
Mm-hmm.
able to do the strategy we just displayed,
Yeah.
you know? So it's
Yeah.
working backwards. What do you want to accomplish? And then going out and getting it so that you can accomplish that.
Yeah, I remember thinking the same with Amazon. I was like, how are these like companies like not paying anything and stuff? And then I started kind of like learning a little bit more and more and reading. I was like, well, like, yeah, no wonder, because now I'm kind of like, with money chisme and stuff like that. This year's gonna be the year where I actually make it into a business, right? 'Cause, like before it was just like the brand and whatever. And then this year I'm gonna try to go establish it, and then I'm learning about like the things that you could write off and all that stuff to for startup costs and all that stuff. I was like, well, no wonder, you know, that's why
Yeah.
they're like deducting all this stuff. And
But do you see how, like you're mentioning, you're reading the books, you're going out and doing it and all of that
mm-hmm,
stuff. What I like about what we've brought to the table is we introduce it to our clients. We start to open them up to realize that there's more out there. One of the
mm-hmm,
assignments I always give my clients is read Rich Dad Poor Dad.
mm-hmm,
It's one of the best books because it explains it in very plain English, and it's
mm-hmm,
able to demonstrate what a W-2 employee is versus a self-employed individual.
mm-hmm,
Okay. And I like that book because yes, it's a real estate book, but
mm-hmm,
aside from that, what I like about it is that it just explains to you how our system is set up to tax all the W-2 employees out there at a much higher
mm-hmm,
rate, and all their deductions are limited, right? And then you have your self-employed individual who can make money and write off all of its expenses that it needs, anything that's ordinary necessary for its business to
mm-hmm,
be able to go make that money and pay less taxes, right? And so understanding the two is something that when clients figure it out, they start off with a W-2, but that side hustle they have turns
mm-hmm,
into their full-time job because they realize that they're paying less taxes as self-employed than it is to be a W-2 employee. So that connection right there, I love, that book for me helps start to educate clients on what it is that I'm trying to help them with. And that's where we become a resource to our clients, right? We are here to help them answer any questions. Some of them will email or text or whatever. And the main thing I always tell them, right, is let's just keep it clean. If
mm-hmm,
you're starting a business, open its own bank account and create a separate box, a separate entity for it. It doesn't have to be incorporated right away or anything, but you want to treat it as a separate individual, right? As a separate box so that
mm-hmm,
there's no commingling. When people are afraid of the IRS and you really look at IRS audits, is because things were commingled. The IRS can identify whether this is a personal expense or a business expense. But if you keep all your business expenses in the same account, then it's easier to prove that it was a business expense. But once
mm-hmm,
you start to commingle, the IRS can easily disallow certain things because there's no clear transactions because some of them are your hair and your nails and your
mm-hmm,
vacations or your kids' meals or whatever, and so they're like, okay, what is business, what is personal? And
mm-hmm,
so keeping it clean and separate is the very first thing you want to learn to do so that you could learn more about how to take advantage of the business. I encourage my clients all the time, make more money. They're like,
mm-hmm,
well, the more money I make, the more taxes I pay. I said,
mm-hmm,
yeah, because you're not strategizing, but go out and make more money and let's strategize and see what we could do for you to keep more of your money.
yeah,
So, there's so many things out there and they're just underutilized by the common individual. And, my hope is that one day, this whole industry changes. There's tax preparers at every corner. 99% of them just do preparation. Very little people do tax planning. And so I hope that that changes one day.
like because we do need it. Like it's ridiculous that like W-2 people are just like getting like ran over by taxes because we
Yeah.
just don't know what we can do and stuff. And I know we kind of like touched a little bit on the real estate benefits as far as tax purposes, that could help lower your taxes. What other things can like a W-2 person do to help, lower their tax liability?
It is harder for the W-2 individuals, right?
Mm-hmm.
Aside from, doing your 401k contributions at work, making sure you're doing the match, because that reduces your income, which turns around and reduces your tax liability.
Mm-hmm.
Why I like real estate is because it's an asset that, in history, over time, over a long term, tends to appreciate over time, right?
Mm-hmm.
So now you've made an investment to purchase this property and it's growing over time. Yes, there's been stuff in history where it does, there's been crashes or adjustments or whatever. But if you
Mm-hmm.
still look at that point and look at today, it's still higher, right? It's
Mm-hmm.
still gone up in its time frame. And someone else is making the mortgage payment for you.
Mm-hmm.
So that's a plus. It's reducing that balance on that mortgage, creating
Mm-hmm.
equity for you to be able to utilize it if you need it. And then you get cash flow sometimes, depending on the property that you acquire. So
Mm-hmm.
my whole thing was to when I would bring that up to people, because we're in California, uh,
Mm-hmm.
I am federally licensed, so I work with clients across the US, right?
Okay.
But when I'm talking to my client here in California and I'm letting them know, hey, did you know that you could do this? They're like, well, yeah, but the properties are 500,000 or 800,000. Like, how am I going to come up with a down payment of $200,000 to be able to put this into play? Or
Mm-hmm.
I don't think I'll ever be able to own a primary residence because they're so darn expensive. So
Mm-hmm.
I had to step out. I had to go out and look. And
Mm-hmm.
so what I did was I started to copy. I started to copy other clients. I'm like, how come you have, 20 properties and this client doesn't have any and
Mm-hmm.
makes more money than you? And so I started to copy the successful clients that already were building these portfolios. And it
Mm-hmm.
was like, what are you doing different? And that's when I started to learn and copy it and then share it. And
Mm-hmm.
so now when clients come in and they tell me, how am I going to do it? I'm going to tell you how to do it because so and so's already doing it. Obviously I'm going to give their name, but because someone else making X amount of money is doing it, or this is how they got started. And
Mm-hmm.
then I took it a step further. I wanted to learn more, so I did it myself.
Mm-hmm.
My first property was acquired in Ohio, and my down payment was $17,000.
Mm-hmm.
Why? Because I was like, that's pretty easy to save. I mean, yeah, it's going to require pinch here and there,
Mm-hmm.
but I can save 17 versus 100,000,
Yeah.
right? It's like a little more doable. And I just saw it as a goal that was reachable, whether it was putting my refunds in that pile and saying, okay, I got a $4,000 refund. I'm going to save it towards my 17,000.
Mm-hmm.
I'm not going to go out and, eat here and there or whatever, or I'm going to pick up an extra shift or whatever I have to do to save that money. And it was a lot easier for me to save it.
Mm-hmm.
Once I had that down payment, I went ahead and I bought my first rental property. And the rental property was in Ohio for $70,000.
Mm-hmm.
I never visited that property
Mm-hmm.
ever. That last month was the first time I went to visit that property. And but I had to realize that I had to create a team that I can trust, that were going to be my boots in the ground, that were going to manage my property, that were going to leave me alone because I'm growing my own business. I don't need to
Mm-hmm.
know that the doorknob fell. Fix it. That's what I paid for, right?
Yeah.
And so I had to become this person where I was like, if I could do it, I can teach it. And so I
Mm-hmm.
started to learn how I want to be hands off. If you want to manage your property, more power to you.
Mm-hmm.
I don't.
Yeah.
I and I have properties and I want to go and I want to have doors in every single state if possible. I want to diversify my doors like I would diversify stocks because people
Mm-hmm.
don't want to put all your money in Google, right?
Yeah,
Whatever.
exactly.
So I don't want to put all my money in Ohio or Arizona or wherever, right? I want to have doors all over the country if I can. And so I just started to build more teams. And then clients are like, well, I want to own one there. And I'm like, okay, here's my contact. And this is what they do for me. And this is how it works. And then before you know it, clients are like, well, I want to do it too. And then so there's a whole bunch of us now that
Mm-hmm.
invest in properties out of state. And it could be Alabama, Mississippi, Tennessee, Kentucky, and it's nice because we're building wealth and we are still doing what we do. We still work and we still do all that. But now we get to strategize and we get to play.
Mm-hmm.
We have rentals on our tax return. What are they doing? How do we create a tax free? Do we do a cost segregation? People are like, what's that? I'm like, let me show you what cost segregations
Mm-hmm.
do, which is that bonus depreciation. I
Mm-hmm.
mean, there's so many cool things that you could do based on whatever IRS rules are released or, are going on in that time frame, but learning how to take advantage of that.
Mm-hmm.
And before you know it, people's portfolios just started to grow. And people were excited, people were sharing, and they're like, without you being able to introduce this to us, we didn't know how all this was going to work.
Mm-hmm.
So now, like I said, I had never visited my properties, and clients have houses down the street. So I'm like, hey, take a picture in front of my house. And they're like, okay. And they would. And so they're like, I can't believe you've never been out here. I'm like, never been out there, but one day I'll go. And an opportunity came up where one of the properties is vacant and I wanted to go
Mm-hmm.
see it. And so I went last month, but it was something that it just came up out of the blue. But
Mm-hmm.
I like the fact that I don't feel like I have to go visit those properties.
Mm-hmm.
But the cash flow is nice. And then the
Mm-hmm.
fact that I can make it tax free is nice.
Mm-hmm.
And the fact that now I have more money to invest in other properties when the opportunity arises. And so that's how you continue to grow your wealth is
Mm-hmm.
continue to reinvest the extra money that you're making instead of spending it.
Yeah.
Um, I was the type, I wanted new shoes, I wanted a new purse, I wanted,
Mm-hmm.
have a nice car. Now I'm like, I'll drive a clunker, I'll have no purse, I'll wear my shoes till they have holes in them.
That's so me. I got rid of one of my cars so I could buy land because I was like, car, land. And so now I'm driving this 2010 beat up Honda Civic,
But
but
you
I
know what?
am driving it knowing I have some land and some properties, like happy as can
You
be.
know what? I remember my mom being, ay, esa gente es bien coda, pero tienen un montón de casas. No sé.
Yes.
I want to be that now.
Yeah.
Before I saw it as a bad thing. And now I'm like,
Yeah.
heck no, I want to be that.
Yeah. Yeah. Eventually I'll get
Different
a better
perspective.
car, but right now I'm happy with this right now.
Yeah.
And so, yeah, same way. And I haven't got to my properties either. Like I just have never stepped. I wanna try to make a trip this maybe this year just to check up on them and kind of put eyes
Yeah.
on it just to say I have and um see it. But yeah, so going back to the depreciation and the bonus depreciation, like, can you explain both of them, like in like the difference?
Of course. So, right now, in 2024, so in 2018 through now, there's accelerated depreciation, which means that your regular depreciation, for a single family home, you can divide the building value over 27 and a half years.
Mm-hmm.
And so what people don't know is typically people are like, I bought a house and it's going up in value, right? I bought
Mm-hmm.
it for 100,000 and now it's worth 150. Like it's more taxes. I'm like, no, it's the opposite. The
Mm-hmm.
IRS actually depreciates the purchasing price. So if you bought it for 100,000, right?
Mm-hmm.
And let's just say the building is, I don't know, 70,000. That's what it's worth. And
Mm-hmm.
30,000 goes to land. Well, that 70,000, you can depreciate it over 27 and a half years, which means
Mm-hmm.
you divide it by 27 and a half years. And every year you get a little write-off for the building. The IRS says the building value is this, and you get to take a little write-off for it every single year. Well, in 2018, when some IRS rules allowed for items to have accelerated depreciation, bonus depreciation, meaning that anything that had a life of under 20 years, you
Mm-hmm.
could take it in year one. So people started saying, well, my toilets have a life of 5 years or
Mm-hmm.
7 years or whatever. Or the IRS says that the windows have a life of 15 years, or
Mm-hmm.
doors have a life of 15 years, whatever the IRS rules, there's a whole list of them.
Mm-hmm.
So that means that those items, if you put a value to them, could be taken all up front in year one when
Hmm.
you purchase it. So all of a sudden, all these people are doing cost segregations, which is accelerating those items and those depreciation. And now they're having these huge losses on these on these rentals
Mm-hmm.
because they got to take an expense of the window or the doors or whatever all in year one, creating 10, 20, 30,000. I think the most I've seen right now is about $130,000 loss
Mm-hmm.
rental when the money didn't come out of your pocket. This
Mm-hmm.
is numbers on the tax return only. So
Mm-hmm.
it doesn't hurt your purchasing power. Your lender doesn't say, hey, you lost $130,000. It's only a number on the tax return. But
Okay.
depending on how you're set up, depending on what you do for a living and a whole bunch of other factors, this loss could maybe be released on the tax return. Maybe you only get 25,000 this year because of how you're set up. Maybe you
Mm-hmm.
only get a $5,000 loss, or maybe it gets suspended to the following year.
Mm-hmm.
It's about strategizing. That's an individual question. I'd have to look at your tax return,
Mm-hmm.
see how everything is set up to in order for me to guide you on it. But know that there's things like this out there that you can utilize to, create more strategies. So
Mm-hmm.
sometimes people are like, well, I make too much money. I won't be able to take it as a write-off. I go, it doesn't mean you shouldn't. And
Mm-hmm.
you take it, and now you go make money somewhere else that will offset that loss. And now you don't pay taxes on those dollars.
Mm-hmm.
So people are like, wait, I could do that? I'm like, yes, you can. And so that's what planning and strategy is about looking for things. It's not about can I write it off? It's about how can I write it off? How
Mm-hmm.
can I make this a write-off? When you ask me how, now my job is to create a plan for you so that you do it. If you ask
Mm-hmm.
me, can I write it off? I'll say, no, you can't. Plain and simple,
Mm-hmm.
right? But if you change your structure, if you change your setup, if you change and tweak this and that, now it's a write-off. And
Yeah.
so that's where people fail to make those changes in that planning and really take advantage of their tax returns.
All the more reason to get into real estate investing, right? Especially right now before you said what year it was gonna end?
So it's supposed to kind of sunset in 2025.
Okay.
But you never know. I mean, right now there's a bill that they're trying to retroactive the 100% because it's going from 100% depreciation to 80% to
Mm-hmm.
60%, and then it's supposed to vanish, right?
Mm-hmm.
Well, there's a bill right now that they're trying to go back and say make it 100% for for the remaining of the time or whatever. Um, hey, if it passes, that means you get more. So
Mm-hmm.
learning to take advantage of stuff like that, having somebody that stays in the updated with all of those laws is you want to have somebody like that in your back pocket for sure.
Because like especially right now, I think the number one thing that a lot of people that may be interested in getting into real estate investing is the interest, and they're like, oh, interest, 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 like I don't want to get into it or whatever, but they fail to see the whole picture. Is like
Oh
you get
yeah.
tax benefits as well, and on top of the cash flow and all that stuff is like you have to think about all of that. Don't just get lost in just hyper fixating in that it's a high interest rate because
It's
it's
it's a high
everything.
it's a high interest rate compared to what though, right?
Mm-hmm.
To the extremely low interest rates we had for a while. You know
Yeah.
what I mean? Why don't you compare it to the 80s when they were 15%, 19% when people were buying houses? My
Mm-hmm.
parents bought their first house and they paid 13%. They were paying
Wow.
13% on their mortgage. So if I compare it to when my parents bought their house, guess what? They're cheap,
Mm-hmm.
right? They're low. So it's what are you comparing it to? Plus, make a good comparison. I have clients that'll be like, well, I wanted to pay 3% interest. Okay, so you're paying 2% more in interest. It's costing you X, translate that into dollars.
Mm-hmm.
It's costing you an extra couple $1,000s a year, right? But you let go of $4,000 to save 2,000. How does that
Exactly.
make sense? And they're like,
Exactly.
oh, I didn't look at it that way. And I'm like,
Yes.
I get it, maybe over the long term, like I go, but even then, there's appreciation on the building.
Mm-hmm.
You can refinance and put your interest rate lower if you need to. Like, look at the big picture. Sometimes it does not make sense. Believe me,
Mm-hmm.
we have calculators that'll show us whether you should buy or not. Yeah, sometimes it doesn't make sense. So
Mm-hmm.
don't look for another one. I'm not saying don't buy. I'm just saying don't buy that one.
Yeah,
Another
exactly.
one, you know? But there's so
Mm-hmm.
many tools out there. There's so many things. And I just want people to really, really get the resources that they need, get educated. There's so many cool things out there that can be done. And if you want change, you can make it happen.
You're a real estate investor and I am as well. And now I'm thinking about like, okay, so how do I pass that on to my stepson and future kids or whatever? I know you know a little bit about like building that legacy and the taxes that go along with. Can you like expand a little bit on what we should be thinking about, you know, to, like transfer that wealth onto our future generations?
Yeah, of course. And I mean, I see it a lot again, in our Latin community. And, we have to be careful. We have to be careful because our parents don't know any better. Our grandparents don't know any better. Sometimes we don't know any better, right?
Mm-hmm.
But if you're out there listening and you have access to Google, you should be able to Google whether your parents should transfer title to you or not, right? So what ends up happening is, when you acquire real estate, whether it's your primary residence or rentals or anything like that, you want to have trusts. You want to have trusts in place. Maybe you have LLCs, all that other stuff. This is now going into your asset protection. We have attorneys on our team, referral partners, but it needs to go in the setup. The original setup has to be like a trust.
Mm-hmm.
Trust becomes alive when you pass. So
Mm-hmm.
that trust needs to have instructions on what to do with these assets when you're no longer roaming this earth,
Mm-hmm.
right? So when you pass, the trust becomes alive, and your trustee is supposed to be like, okay, she wanted me to give this to her grandma and her grandpa and her sister and the neighbor, or this charity or whatever. There's instructions on what your wishes are once you're no longer walking this earth.
Mm-hmm.
Maybe you say sell this property, maybe you say never sell this property. So even though you're no longer roaming this earth, and you can still control your assets even after you're gone,
Mm-hmm.
because that trust is your instruction on what you want to do. So
Mm-hmm.
I have had clients who build extreme wealth. I mean, we're talking about shopping centers and just amazing commercial and assets,
Mm-hmm.
but their kids are not good with money.
Mm-hmm.
So they're like, I don't want to leave any of this to my kids. They're going to blow it the day I die.
Mm-hmm.
And I'm like, okay, well, what do you want to do? So we get together with the attorneys and they design a really cool trust where it skips the kids.
Mm-hmm.
It skips their kids and then it goes to their grandkids. Now, the grandkids, once they're 25 or whatever age that the parents decide,
Mm-hmm.
they could sell the property if they want. In
Mm-hmm.
the meantime, their children and the grandchildren, when they're young, live off of the rental income.
Mm-hmm.
But guess what? You decided that before you left this earth. So
Mm-hmm.
there's really good instructions on what it is that you need to do.
Yeah.
Now, you hear even of extremely famous people, movie stars, whatever, that don't even have a trust in place and they
Mm-hmm.
pass. So now what that happens is all those assets, and it could be your primary residence, rentals, money in the bank account, it doesn't matter. It goes to the state. And now the state, you have to go to court. You got to go, hire an attorney to represent you and try to get you your assets back because you deserve, this is your family's money and you want it.
Mm-hmm.
But they're going to charge you so much money that you lose a huge percentage of your inherited wealth to the court system
Mm-hmm.
because there was no trust left in place.
Yeah.
So the trust is going to help dictate where everything goes. And you want to title your houses in the trust. You want to title your assets in that trust, because if it's not titled to that trust, then it's not in the box. So I always tell
Mm-hmm.
clients, a trust is like a box. You
Mm-hmm.
want to make sure that everything, all the little assets you want are in that box, because if they're not, then when you pass, that property stayed out of the box, and then the trustee can't control it. It goes to the
Mm-hmm.
state. And then the state, you have to go to court to get it from the state. So inheriting something is definitely one of the ways you want to go, because taxes reset,
Mm-hmm.
meaning if you, let's just assume I bought a house for 100,000 and the day
Mm-hmm.
I die, the house is now worth $1 million.
Mm-hmm.
Well, when my son inherits that property from me, he inherits it at the $1 million value.
Mm-hmm.
So no taxes have to be paid by my son. If he turns around and sells it, he could turn around and sell it and pretty much pay no taxes, right?
Mm-hmm.
So depending on inheritance laws and everything changes, but typically that's what happens. So you want to inherit, But sometimes parents are like, you know what? I don't want nobody to know I have this house, or I'm going to die one day and I just want you to have it now. And
Mm-hmm.
they gift it to the child, or they gift
Mm-hmm.
it to a brother or whoever, because that's what happens when you transfer the title, is you're basically gifting them a title to an asset.
Mm-hmm.
Well, when that happens, you also give them your original price. So a gift comes with its original price. So if I
Mm-hmm.
gift you my house and I paid 100,000 for it, well, now you are receiving it with $100,000 value. So if
Mm-hmm.
you sell it the day I die and it's worth $1 million, guess what? You have to pay taxes on $900,000, which it's 50% right off the bat here in California. So you'll lose $400,000 of your inheritance in a sense, because it
Mm-hmm.
was gifted to you versus you getting it the day after, the day I die or whatever.
Mm-hmm.
So people make big mistakes in that sense a lot of times. I see it all the time. And I have to tell clients the sad news that Uncle Sam's going to take a huge portion of your money because it wasn't done correctly when,
Mm-hmm.
whoever was still alive. So
Yeah.
it's important that we become very knowledgeable in those areas. Um, we don't want to talk about ever passing away,
Mm-hmm.
but there's other reasons why you want to set up trusts. And there's a lot of things that you want to be aware of, because if you don't, Uncle Sam takes advantage of the fact that you were naive, that you didn't
Mm-hmm.
know, that you just did whatever. And the only person that benefits from that is Uncle Sam.
That's how you hear like these stories of like that a son had to sell the house because if they keep it, it's like you gotta pay the taxes on it
Yeah,
and you can't afford it, so now you have to sell it. And so it's always sad to hear when that happens. It's like they'll lose a house that's been in the family for generations
yeah.
and then all of a sudden they have to give it up because whoever they gifted it to can't pay the taxes on it.
Yes, I agree with you. It's so sad. It's just there's no planning. And
Mm-hmm.
like I said, I come from a very humble upbringing, my parents don't speak English very well. And it's sad that, if it wasn't because I know this stuff, they don't, there's not a lot of help. And they'll always be like, pues yo no sabía, and
Mm-hmm.
dijo, and so, and it's like, but they're not educated, and that's the hard part, because you come to this country, they work their little behinds off, they
Mm-hmm.
make something, and they create these assets just for Uncle Sam to benefit from them. So it really
Yeah.
sucks on all, in all ways.
Yeah. So I'm so glad that you're out here trying to make that change and not just like we always talk about like, oh, we have to learn how to do, invest and all that stuff, but we
Yeah.
also have to learn how to keep more of our money and when we
Yes,
pass, ensure that those few generations, because we always talk about building generational wealth and all that stuff, but we have to make sure that they can get that generational wealth, as much as possible without, Uncle Sam taking a huge chunk out of it.
for sure, for sure.
So for those who are interested in working with you, where can they reach you?
I'm very active with our social media. Uh,
Mm-hmm.
we are on the Instagram is Prominence Services, and our website is prominencebusiness.com. And I invite anybody that is interested in learning more about what we do. I have a webinar once a month. It's
Mm-hmm.
every first Wednesday of the month.
Mm-hmm.
And you can always email us or text us and reach us through our social media, like I said, to ask for the link. It's a free webinar where I just kind of talk a little bit more about these things so that people really try to spread the message and know that there is help out there. We don't have to be extremely rich to have a team behind us. We've built an amazing referral partner team with attorneys that we only use them if we need them. We only pay them when, to answer our questions. So it's really neat that it's on needed basis and you don't feel like you're being gouged. We want
Mm-hmm.
people to really feel like they have the resources that they need.
Any final thoughts?
Well, I want to really thank you for having me.
Mm-hmm.
It's when I saw money chisme, I was like, "Ooh, I love it," I believe you're trying to do the same thing, right? You're
Mm-hmm.
trying to spread a message, you're trying to let others know that there is a better way. And that is truly my passion, is to let people know that taxes are really more than you think that they are, and that there is a better way. So just find the right professional that cares, find the right individual, look for tax planning in your area, reach out to us. I have a community of people if you want somebody local to you.
Mm-hmm.
But like I said, I work with clients across the United States. It's a Zoom appointment. I share my screen with you. We go into detail. But again, it's because this is my passion. I love what I do.
Mm-hmm.
I want to help people. I want people to be able to keep more of their hard-earned money. So reach out, and I will connect you with someone in your town if you want somebody local to you. Okay.
Awesome. And I'll have all her information down in the show notes in the description.
Thank you so much. Had a great time. Thank you.
Awesome. Thank you. And I will see everyone in the next episode. Bye.